look at the jump in US recession risks, which caused a bloodbath in global markets. Until the Fed meeting on Wednesday last week, expectations were for the US Federal Reserve to lay the path for rate cuts in September. But data since then has reignited recession worries. Now, the narrative on Fed rate cuts is not if and when, but by how much. Take a look at this next report for more.
Monday saw an extension to the global stock market rout as investors fled to the safety of bonds. This is driven by fears that the Fed is lagging behind the curve in its policy support for the US economy's slowdown. Traders priced in additional interest rate hikes in Japan, sending the country's stock down violently. The Topix index marked its biggest three-day drop since the 2011 Fukushima nuclear disaster, pushing the Japanese market into a bear market. A measure of Asian stocks fell to a 4-year low, reversing the gains made in 2024. The MSCI Asia Pacific Index entered a correction and wiped its gains for the year. The benchmark was down about 5% to mark its worst session since the early days of the pandemic in March 2020. This comes after US non-farm payrolls saw one of the worst prints since the pandemic. A carefully monitored recession signal was set off when the unemployment rate suddenly rose above the Fed's year-end prediction. Whenever the 3-month average of the unemployment rate rises by more than 0.5 percentage points over a 12-month period, we get a recession. This is based on the SARM rule. Everything was weak in the July jobs report. The more the US soft landing theory gets questioned, we could see further pullback in global stocks. Economists at Goldman Sachs raised the probability of a US recession in the next year to 25% from 15% penciled in previously. However, Goldman economists also said the risk of a recession is only limited. In September, November and December, Goldman anticipates a 25 basis point cut. Goldman's Fed projections are more conservative compared to Citigroup and JP Morgan Chase. In contrast, revised projections by JP Morgan and Citigroup show the Fed is likely to cut by 50 basis points in September. Whether these investment banks get it right or not, the market's plunge underscores the growing fear of recession. The sea of red in global markets also reflects that the Fed is already too late. So will we get a soft landing, or will the Fed's decision to leave rates on 2-decade highs result in a recession is to be seen. More importantly, investors will watch if the Fed's higher-for-longer rates rhetoric has done permanent damage to the economy. Business Bureau Report, WION World is One.